Hello, my name is Nelia Castro, and I have been in the loan servicing business for the last 40 years. As qualification is concerned, obviously, the first thing that the lender will look at will obviously their capability of making the mortgage payments after they have been modified. And typically, it's usually there is a mark, and that matrix is supposed to be 31% of their gross income. If right now their mortgage payment, I'm going to use an example, that's the one I had this morning, was $4,800. But his income was only $7,500. So if you multiply 31% by 7,500, that's about 2,300. You have to take in consideration taxes and insurance. In his case, taxes and insurance was $975. So what are the chances of him getting approved? It's slim to none, because then you'd have to have a principal balance that will equate to his principal and interest of $1,300, and he owes $735,000. That would never happen. So what he could do is get people in his house that have income, and they can be contributors, renting out rooms, or if it's a mother can contribute, renters can contribute. So we have what we call a REST report, and that report will basically give me a guide as to what income is needed in order for them to get qualified.
Yeah, and so then a lot of people, it seems like they are told they can't get a modification, and then they might try and explore it with another attorney or even place that does loan modifications,
yeah, well, those
right?
pop-ups you just talked about, they're mostly a sham. I mean, they take money from somebody every month, and boy, I don't know how many people we've had come in here and say, can you help me sue these guys, because they didn't do what they said they would do. Now I'm in a deeper hole than I was when I first went to them. You know, it's a tough road to go for that.
Yeah.
So. Yeah,
and I mean, it's not necessary to sue the lender considering there's not a judgment against a bank here in California.
The lawsuits against lenders are not generally successful, and as a business practice, I've almost taken one or two, but those are only after they foreclose, because the law now really sets up the lender. If they foreclose, wrongful foreclosure, then that would make sense to sue them. But otherwise, I'm not taking those lawsuits.
I'm not sure about any of the cases that you guys have seen where people have spent a lot of money wrongfully to an attorney or even just to someone to help them, quote unquote.
Yeah, we had a lawyer a few years ago. We would refer cases like that too. She'd file the lawsuit, and then she'd seek a preliminary injunction to stop the lender from moving forward. And she was successful at it for a while, but then toward the tail end of it, she was unsuccessful at it, so she got out of that line of business. So the lenders were winning those cases in the trial court level.
Right.
And I follow the cases that go up to the Court of Appeal, and those are kind of a mixed bag, but they more favor the lender than they do the borrower. So
right.
In San Diego, they are pro lender.
Yeah, so it just tells you that you know, as a lawyer, and if you want to be ethical about it, it's not a good move to promote litigation to somebody in that position.
Right, and it seems like you know, I've had a couple of calls with a few different people who are actually, you know, their attorney is telling them, you know, they can't charge up front for loan modification, and so it's the, you know, the marketing behind that, it seems, is we'll sue your bank. So they put them on a retainer monthly, which is almost as much as their mortgage payment, if you ask me. And then all of a sudden they're doing a loan modification in the midst of it. And so they're advising, oh, well, we can sue your bank because they did you wrong, and we'll get a loan modification while we're doing it.
But have you heard of success stories doing that? None? That doesn't surprise me.
Yeah.
I don't think that's an appropriate thing to do. I mean,
right.
But that's why there's so many lawyers in the world.
Yeah, it sounds to me like, you know, you can't charge up front for loan modifications, and so they're going down that route of, well, I can put you on a retainer to sue your bank, but I can't charge you, but I'll do it in the meantime.
Yeah, but for us, we won't sue the bank, and we'll only take someone for loan mod if we think we're going to succeed. And like you said, our success rate's probably 95% of the people we take.
you file a bankruptcy, a Chapter 13, and then the process behind that, you're paying an attorney, and then you're also paying your mortgage on top of that. So you're paying that for 5 years, and you actually wipe the arrears out, then you can come out looking pretty good and stay in the property. But if you don't, and you just file bankruptcy to kick the can down the road,
the other one, you're going to be paying pre-petition and post-petition payments, and if the people can't afford their mortgage in the first place, very few can afford all of those expenses.
Yeah, exactly.
That's what we find anyway.
4 people that came in so far to get their loan rescinded, the foreclosure sale, and 3 of them I was successful in doing and getting it back. It's harder when it's a third-party bidder. If it's a third party, the third party can say, "Oh, I'll give it back to you, but now you have to pay me interest on my investment." So, but I was able to get those houses back. But you got to come to me the minute it happens, before that trustee's deed upon sale is recorded, because it's a lot easier to undo. Right. Once it's recorded, then guess what? Eviction starts the process.
Ideally, you guys are going to tell them within 20 minutes, right? Are you going to be approved or aren't you?
And we get, I bet you 30 or 40% of our clientele are people who have tried to do their own loan modification and then came to us because they just couldn't get it done.
And it's very dangerous for people to do this on their own, because there's formulas that they have to contend with. And if they give them wrong information, it's going to be harder for me to undo it. It's really very dangerous, because you're dealing with time frames that you're not aware of and formulas that you don't know anything about. So there are some things out in the computer that says the reason why people, when they're doing it, they fail. That's not their thing that they do.
It's yours. It's your specialty. Yes. Yeah. And like we said, you don't get paid unless it gets approved. Right.
On average, what would you say with the average payment happens though in a loan modification? Would it go down 10%? Would it go down 20%? Is there kind of an average that you see? The
other day, she was making $1,900 and it dropped down to $1,500. So that's a $400 drop. I mean, the numbers are relevant. If she's making $4,000, they'll give her $2,800. That's a lot of drop, and I've seen that. But those are the kind of stuff that I see. I don't see any 5% or 10% drop.
Has anybody ever gotten foreclosed on during the modification process?
As far as since I've been here, there was only one that had gotten foreclosed on. Typically, we make sure that it doesn't. So out of the 700 something, maybe just one.